Good afternoon and welcome to your weekly FX options report. Today is Wednesday, June 16, 2010. In midweek trade, the broader U.S. market is trading flat. There were a slew of U.S. economic data releases earlier today, with U.S. housing starts tumbling by 10% in the month of May, down to a seasonally adjusted rate of 593,000. Meanwhile, U.S. Wholesale prices declined by 0.3%, while core PPI rose by 0.2%. Now, producer prices did decline in the month of May as energy and food prices fell. In other economic data releases, industrial production spiked by 1.2% in May from the 0.7% in the prior month. Capacity utilization rose from 73.7% to 74.7%. Now, taking a closer look at the spot FX market, the U.S. dollar is trading lower against the euro, pound, as well as the Japanese yen, but has pared back from earlier session losses. Euro dollar is still managing to hold above the 123 level, despite more negative sentiment over the eurozone. Now, there are renewed talks about a bailout for Spain, and IMF's Dominique Strauss-Kahn and Spain's Prime Minister will be meeting later this week on Friday. Now, there have been reports that the EU, IMF, as well as the U.S. Treasury are discussing a 250 billion euro credit line for Spain, all of which have been denied. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And in our next segment, which is our daily trend report, we'll take a closer look at the individual IC FX option pairs. Now, starting out with the AUX, which is the U.S. currency against the Australian dollar, that pair is under pressure. Now, the pair has been coming back below the neckline of the double bottom, and the preference of trading central analysts is short positions below the pivot of 120, with targets standing at 111.20 and 106.75 in extension. And taking a look at the BPX, which is the U.S. currency against the British pound, the upside does prevail. Now, the pair is pulling back on its new support ahead of a rebound, and the preference of trading central analysts is long positions above 67, which is the pivot, with targets standing at 70 and 73 in extension. And for the CDD, which is the U.S. dollar against the Canadian dollar, it is under pressure. Now, the RSI is badly directed for the CDD, and the preference of trading central analysts is short positions below 106.50, with targets at 99.50 and 98.35 in extension. And for the EUI, which is the U.S. dollar against the euro currency, the upside does prevail. Now, the pair is pulling back on its new support ahead of a rebound, and the preference of trading central analysts is long positions above the pivot of 78, targets at 84 and 86 in extension. For the SFC, which is the Swiss franc, which is the U.S. dollar against the Swiss franc, the upside prevails. Now, the pair has struck against its resistance and is facing a pullback on its new support. The preference of trading central analysts is long positions above 112.80, with targets standing at 117 and 119 in extension. Last but not least, taking a quick look at the YUK, which is the U.S. currency against the Japanese yen, a rebound is expected. Now, the YUK is rebounding on its support as the RSI is well directed. The preference of trading central analysts for the YUK is short positions below 90, with targets standing at 93 and 95 in extension. Now, moving on to your weekly trend opinion, we did see that the U.S. dollar weakened against the majors last week. Now, Trading Central did take advantage of this move, and they did see that the CDDs, their target on the last put had been reached, which led to a 100% gain. And in terms of portfolio performance for Trading Central, since its inception, which was in August of 2007, it is up by 1,453.55%. And since the beginning of this year, January 2010, it is higher by 173.45%. Now, we do have a couple trade alerts for you right now, including one for the YUK and one for the AUM. Now, starting out with the YUK, they are looking at this, and Trading Central analysts are considering calls on the YUK. The pair has rebounded on its support and is expected to post a further up move. And in regards to the trade alert on the AUM, Trading Central analysts are taking advantage of dollar weakness against the exotic currencies, so Trading Central did recommend calls on this pair. The RSI for the AUM is posting a bullish divergence, and the pair has broken above its intermediary resistance. Looking ahead to next week, Trading Central analysts will be looking at the PZO as well as the CDD and the NZD. Now, starting out with the CDD, they will be looking at this pair because it is under pressure and challenging its new support. The daily RSI is also badly directed. Now for the PCO, that's also badly directed and the RSI is capped by a declining trend line. Last but not least, for the NZD, it has struck against its resistance and should reach its next support. The RSI does remain on the downside. And that does wrap it up for a weekly FX options report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.